Hey traders, Raghee here. Let's get an audio and video check-in. Should be good to go. Welcome to another episode of Charts and Coffee for Thursday, December 24. I have a shortened trading day today. So not a lot that I'm going to encourage you guys to do actively. In fact, if anything, one of the things that I've been doing over the past, I'd say, week is reducing or at least taking profits and trailing stops on longer term daily time frame positions. And also, being proactive and thinking about 2021 and the kind of watch list that I would like to take advantage of. But I've been focusing on short-term time frames. I've been focusing on intraday time frames, on being a day trader the first 2 hours of the day, staying nimble and not really committing to anything throughout the remainder of this week, which there's not much left of. And even for next week, gang, be cautious. Now, yesterday, and this is on par with what we see during the holidays, but I think we had something along the lines of 30 some odd % reduced volume as compared to normal non-holiday volume. So keep that in mind in terms of participation and the opinion you're seeing, because it's a smaller group. It's a much more limited group in terms of the opinion that we're seeing expressed in the market. All right. So with that being said, good morning. Good morning. Yes. Happy Thursday, everybody. Yeah. Christmas Eve. I don't know what you guys have planned. And then going into a long weekend. Absolutely. Rocking a little Costa Rican peaberry today. That's what we got going on in the much tinier coffee mug. Although, hey, in transparency, this is the first mug of the morning. This was a second. Look at that. That's insane. But all right. Hope everyone's doing well. Today's a good day for spiked eggnog. All right. So let's see what we got going on here. As always, gang, if you have any questions, let me know. Type them on in. I know a lot of you are probably taking the day off, and then it's probably pretty good advice. But again, thanks for taking some of your time out to join us for Charts and Coffee. So let's take a look at the end of day time frames. Little throat lozenge I'm working here today. End of day time frame on the S&P. What we have going on now today, it should, really, if you look at the tendencies, today should be day one of the Santa rally. I say day one because it's not a one-day event. We really could continue to see movement higher from here on out. And even though we're not punching up to higher highs, it's amazing how people's perception of the current price action, people are freaked out. Why? Because the market's not making higher highs every single day. Think about the mindset of that. The same mindset of the folks who are probably chasing ARKK up near these highs. So look, the market has an appetite, and that is right now in the context of an uptrend for higher highs. So when the market sort of stalls, and I would even call this a major move to the downside, but when the market stalls, generally speaking, mainstream starts to freak. They start to freak out a little bit. They get impatient. And so, keep that in mind, because freaking out is the precursor to panic. So, I don't think that's what we're going to see here, but the markets are right now just sort of levitating. Not the Russell, though. Small cap continues to steamroll ahead. Pullback buys are definitely going to be something we can keep an eye on. One thing I'll mention, if you're looking at the Russell, keep an eye on the regional bank ETF. That's the KRE. Keep an eye on that regional bank ETF, because financials are a key part of the small cap narrative. And you also want to keep in mind that KRE and the Russell tend to track together pretty nicely. All right. So next up are what are some of the individual ETFs that I'm going to continue to watch. Look, these are the same individual ETFs that I will typically watch when I am trading the indices anyways, because these are ETFs that would shed light on whether we're seeing strength in the NAS, S&P Dow, the aforementioned Russell. And so knowing the different weightings of the sectors in the indices is going to give you an edge, not only in understanding what could happen in those indices, but what's leading the charge. Let's take a look at another view of this. And we'll go to sector SPDR. And we'll go to the sector tracker. And sector overview over the last 1 month. This is what we've seen over the last month. Now, take a look at XLK. This was something we talked about yesterday in Charts and Coffee. I've been emphasizing XLK in the chat rooms as well. XLK, XLF, and also XLE, but be cautious. XLE's had a rough month or so. Take a look at XLK. Now compare that, and we're going to jump from 1 month to 6. We're going to go back 6 months of look back. 3 months. The last 1 month. Pretty dramatic, right? Last 5 days. The last 5 days, look who's been holding their own. The reason I'm showing you this contrast is this is one of the things that I do in the Sector Secrets Mastery, and this is something that I do in the options room. This is something that I do in the futures room. These are things I explain in the Countdown Trader newsletter, where you want to look at this rate of change, the trend, up or down, in the sectors. Sectors are your simplest way to make a steady watch list, gang. You want a steady way to make a watch list. You want to virtually be guaranteed, assured that there's going to be attention, on the individual stocks in that sector. Look at passive investing. All right, this is something since 2008 that I've been very much shifting to in my own portfolio management, in my own longer term daily time frame trading, and also in my day trading. Because as ETFs have a more and more important place in the investing world, the way that I look at the market's going to be sort of focused by them, by those ETFs. So take a look. Again, 6 months. This is really cool. It's easy. You guys can go to sectorspdr.com and do the same thing. So when people ask me, Rog, how do you find sector rotation? Again, sector rotation is just a fancy way of typically looking at a way the market is rolling out of one sector and into another. And it's typically a play on undervalue. It's typically a play on rolling out of things that are near their highs and rolling into things that are bargains, that are going to be opportunities to scoop stuff up on the cheap. Hence XLE and XLF's last, say, 2 or 3 month run. Okay, so take a look. Now, I've talked about these 3 sectors quite a bit. XLE we'll have to keep an eye on. XLE is kind of an exception right now to that, but you can see the shift in it, all right? So I hope this is something that's helped. I've had a lot of questions, and we had them yesterday too when I was reviewing some of the questions from yesterday's Charts and Coffee session, and thank you so much for the questions. As I go thinking about positioning in January, these are the kind of things that I'm keeping an eye on, and keep an eye on XLE, but XLF, financials, XLB, basic materials, and tech, XLK, not the XLC variety, not the QQQ variety, but XLK. You might say, Rob, what's the difference? Isn't tech? Well, you guys know that's not true. XLC is mostly Facebook and Google, Alphabet. QQQ is Apple, Microsoft, Amazon, Facebook, Google, so the whole gang. XLK, however, is Apple and Microsoft. So keep that in mind when you're separating how you want to engage tech. And then that doesn't even include, by the way, things like SMH, CLOU, and SKYY. All right. Okay, so let's see. I've been eyeing Wells Fargo on the daily chart. Hey there, Stephen. I've been eyeing Wells Fargo on the daily chart. Could this be a potential weekly play? Weekly as in weekly time frame? So I can only share with you guys what I actually do, and I don't trade off the weekly. Now, doesn't mean that we can't look at it. If I'm looking at a weekly or even a monthly time frame, that's because my time horizon is typically a minimum of 6 months, and it's going to be something I'm going to put in my portfolio. So portfolio is a completely different approach, really. In terms of my trading book, my portfolios are very different. Portfolio is more of a weekly conversation. And keep in mind, I'm not a big fan of using the daily for trading. I see that it can be popular, but I'm not a fan of that. The longer the setting of your time frame on your chart, that is going to in many ways correlate to your time horizon. Time frame, the setting of your chart; time horizon, the anticipated trend or move, or how long you think you're going to be in the trade. Time horizon. So for options traders out there, by the way, time horizon is oftentimes going to be predicated by the expiration of your option, right? So I'm not a big fan of weeklies because now, yes, your reward is based on the weekly. Your entry is based on the weekly, as is your risk. So think about daily price movement ranges, how much a market can move in a single day, and then think about how much the market can move given 5.5 trading sessions or a single week. And I think for me, I think a lot of traders misuse the weekly and underestimate the risk involved. And for me, if I'm going to trade the daily, it's because the daily has the structure that I want. It's because the daily time frame is one that I like the underlying, as you can see here, gorgeous double green. So I'm with you, Stephen. Absolutely, I'm with you on the structure of the daily in Wells Fargo. 100%, I like it. So unless you mean something other than weekly time frame, but yeah, I like a pullback buy on Wells Fargo, and that's going to actually lend itself really well to how I'll look at XLF on the whole. All right. So thank you for the question. So Roku. Next question is Roku. So let's jump on over there. Now, when it comes to Roku, we could probably make a pretty good argument that Roku is not really a stock, an individual stock that has a lot of exposure to passive investing. We could definitely make that argument. Gorgeous uptrend, by the way. So yeah, last items, gorgeous uptrend. Now, this is part of the ARKK. I mean, you know what ARKK has been doing. So if you're going to look at Roku, I would look at ARKK as really the place where, and by the way, Roku is about 7% of ARKK. So keep that in mind. So where it goes, Roku will likely track with that. So here's your ARKK. I mean, the only laggard here is NBTA. That's the one that I'm not interested in. And TDOC. I'm not interested in TDOC either. Laggards. I mean, look at the way these two are moving while everything else is moving higher, including the broader ETF or our tide. I've got two boats with sort of broken motors, just not able to get out of their own way, even though, you know, the waters are moving pretty swiftly and they're still not able to get out of their own way. That to me is a warning. I'm not interested in laggards. I'm not interested in stocks that are heavily weighted within probably the hottest ETF out there right now and can't get out of their own way. So yeah, I like where you're at with Roku. Last items, I like that in terms of structure and for long positions, not at higher highs, unless you've got a really good momentum breakout. But volume would be part of the confirmation of that momentum breakout. And if that's the case, as I mentioned, volume is going to continue to drop. Today is hardly going to be considered a well-participated session. So keep that in mind, all right? But yeah, I like that. Generally speaking, definitely put that on the radar. Okay, so Mark says I'm waiting for January to get into the markets. I'm with you there. I'm building a watch list. I'm dealing with options that are mostly expiring for the 15th expiration of January and the 19th for February. So I do have some time, better time on my February and further out option expirations, clearly less time in January. But if we get the Santa rally kicking off pretty much now, right? Today would be the day. I think we could see some reasonable exits, or at least scaling out at first targets and moving to break evens next week, which I would really like. That's the timing that I like to use. That's the kind of timing. All right, let's see. Bear with me here. Baba, Rishi. So, Baba is a conversation about what's happening with Alibaba, the Chinese government, and things like that. Here's what I will say. In an environment of the overall market moving higher, I do not want to prioritize stocks that are moving lower. So if we had an overall downtrend, double red on the indices and on many of the ETFs, I would probably say, yeah, let's go ahead and look at BABA. But since we have overall uptrends, I don't want to focus on downtrends in this environment. Good to have a list of them, but I'm not a big fan of shorting markets right now. I have pretty much a long only bias in play, and I'm going to continue to work the market that way. All right. There's a lot of talk about the ARK funds. Right. They're the popular kid in class right now, no doubt. Just remember the history of the market participants out there, whether it be ARKG, ARKK, right? Look, don't chase the hot fund. You know what this reminds me of? Every year, and I don't know if it's any one particular financial publication. It could be Kiplinger's Money. I'm just thinking of any of the magazines you would see on the topic of investing. And they'll talk about the top 10 funds of 2020. You know what that's like? That's like Sports Illustrated coming out with a cover and an entire article or issue dedicated to last year's Super Bowl winner. What happens is market participants go running into those names. They've already made a move. So again, whenever you see those financial publications talk about, hey, these are the best performing stocks or best performing mutual funds or best performing ETFs or whatever it is from 2020, that's Sports Illustrated coming out and having an entire issue dedicated to last year's Super Bowl winner. I mean, really, it's the lesser of who cares. Yeah. And I'm a huge fan, of what she's done, Kathy Wood. Yeah, she has a really good interview on YouTube. You can check that out. She did it maybe a week or so ago. And the thing is, let me show you something on ARKK, which is, I think, kind of interesting. Let's do this. Because it's always important to know what's inside your ETF. That's what these multi-charts are all about. Understanding the structure of the individual stocks, but also the weighting and the composition of an ETF. But let's do this here. So yes, you can see good volume on ARKK. Look at the holdings here, gang. And I want to remind everybody, I am in no way saying this is not a good ETF. But remember, this is an ETF in a bull market, a screaming bull market. It's an ETF that has high concentration weighting. Take a look at 10%, 9.5% Roku, CRISPR, Square. Look, there's a lot of very strong stocks. It's a great list. Don't get me wrong. It's a lot of very strong stocks weighted quite heavily within this ETF. So what do you think happens if just 3 of these names rolls over? 17%, 23%. 23% of the weighting of the ARKK is in 3 stocks. What do you think happens if CRISPR, Roku, and Tesla roll over? So keep that in mind when you're looking at some of these ETFs that have done very, very well. When you take a look at the indices, NASDAQ, S&P, Dow, all high concentration weighted indices, they are going to have these really exaggerated moves going parabolic as ARKK is because of the high concentration weighting. Keep that in mind. It's great for traders. It's definitely going to be very interesting as this plays out going into 2021 if the markets don't continue on with the same kind of track that they have been. All right. So I'm going to answer one more question, and I've got to go. Head on over to the Simpler Futures room. Just a quick reminder, gang, if you want to keep up with different things, different concepts that I teach here in between our charts and coffee sessions, Monday through Friday, check out countdowntrader.com, free newsletter. We cover 1 to 2 concepts, I think, every week. So do check that out. Am I still a dollar bear? Absolutely. Absolutely. That's been a position now that I've had for over 2 months, and I will continue to look for dollar shorts against Australian dollar, New Zealand dollar, euro, pound, and Canadian dollar. All right, gang. I will see you all on Monday. All right. So half trading day today. Merry Christmas to everybody. Or happy Christmas, as my mom likes to say. So yes, happy Christmas, everybody. And have a terrific long weekend. Rest up. Next week should be a pretty good trading week. I'll see you on Monday. Be good to each other.